If you have been trading for a while, you may have noticed that the trading climate nowadays is quite different than before. Just ask those who have been trading for a while and see if they agree. Or if you are a new trader, then you may realize that the outcome and performance of the stock market are often irrational and unreasonable, and you may think that these are normal. Now, the rise of zero commission fee trading platform such as the Robinhood allows the average person, also known as the retail investors, to trade multiple times throughout the day. Not only that, it also allows more retail investors to participate in stock trading, which was almost exclusively reserved for the affluent in the past. So these commission-free trading platforms are essentially breaking the barrier to enter for the average person. My point in this video is that the influx of retail investors, typically the Millennials and the GenZs, and I'm just gonna call them the tech-savvy generations collectively from now on, and they're now spoiling the stock market, deepening the disconnections between reasons and the stock performances. And before I continue with this topic, if you are first time watching a video from this channel, then please consider subscribing as I go through weekly topics ranging from personal finance to investment, and I'm sure they will be particularly useful to you in the near future of uncertainty. Alright, as I was saying, the influx of retail investors are now spoiling the stock market. So why is this a recent phenomenon? Look, ever since the lockdown, people have less things to be entertained. No sports to watch, no place to travel, and they can't even head out to the bars or restaurants. There's really not much people can do. All they can do is to order takeout and watch Netflix or play video games. But none of these were making any money for those who are at their striving age. And what happened next? I'm sure you figured by now. They came into the stock trading business to look for good bargains and quick money. So this explains why there's an influx of retail investors during the past few months. And this phenomenon is consistent across all the modern trading platforms. So now we know where all these trading beginners come from. Next, I want to talk about how they contribute to the disconnection between reasons and the stock market's performances. When you are young, you are more likely to take more risk in your investment approach. After all, you have more years ahead of you to earn it back in case you lose some or all of your investments today. But this could not be true for someone who is in their 40s or older. Their priority is to preserve the capital and save for their retirement. They may still occasionally invest in risky companies, but generally speaking, they are not going to look at stocks from troubled companies. One of them I'm talking about is the car rental company that just declared bankruptcy, Hertz. But look at what happened to their stocks. It even peaked at some point while the bankruptcy was already declared. If you are truly investing into sound companies, then Hertz will be your last pick. But risky investors see this as an opportunity for some quick money. While some of them succeed, most of them don't. Bloomberg also wrote a similar story recently, and they're suggesting that the bored millennials are jacking up the airline stock prices. Look, many airlines had really high stock prices before 2020, and they tanked a lot during the pandemic. But the airline stocks should not be given that much attention compared to other well-run companies. Rather than investing in valued or proper companies, many retail investors decided to invest into companies that are carrying huge debt and burning millions of dollars a day just for a quick return. Now, I'm not saying this is wrong. You should seize the opportunity if you see one. That's how you make quick money. But to the contrary to retail investors, the institutional investors, those are like hedge fund managers or organizations that invest large amount of money based on value and research. They're not going to look at airlines or bankrupt companies. But because of all these irrational activities, we can no longer look at stock market like we used to, where we can somehow form some kind of reasons behind stock movements. It is getting increasingly tougher to do so, but so much easier to just jump into the bandwagon and follow what the rest of the market is doing, like getting the airline stocks. Seasoned retail investors and institutional investors are also feeling the pressure to take riskier and bolder moves in the stock market after seeing so many retail investors are beating the market way better than themselves, making the unreasonableness even worse in the stock market. The S&P and the Nasdaq just had more than a week long of rally, while the economy and the world are still in turmoil. The tech-savvy generations may be one of the many reasons why the stock market is behaving the way it is, and that they must be making lots of money. But according to Robinhood, one of the leading commission-free apps, states that many of their investors are not doing as well as other people think. Yes, there are some airline stocks out there that rise and fall really quickly, and people can take advantage of the volatility. But think about it. If you make money fast and easy this time, then the riskier you will invest the next time. And do you not think that many would have gotten some backfire by now already? So what's the best strategy to mitigate this noisy trading environment? Well, it's gonna sound boring and non-innovative, but stick to consistent and regular contribution to your investment portfolio. Look, you can't beat the stock market. It's easier to be said than done. If you want to make a quick buck with the money that you're willing to lose, then watch out for companies that have highly compromised stock prices, like those in the travel industry. Who doesn't know this saying that you should buy low and sell high? But the best way is still to invest in properly run companies which are not financially compromised. The big 5 tech companies will always be safe places for your investment in the foreseeable future despite their high prices. But many trading apps also allow you to buy fractional shares, breaking this barrier for you, so you can also own a piece of Amazon stock for like $100 or say $50 for an Apple stock. The stock market has always been highly unpredictable, but the influx of young retail investors with their high risk tolerance and optimism, the stock market and its underlying fundamentals have never been that disconnected than ever before. So if you can't beat the market, then just go with the markets. With that said, invest smartly, guys. So if you find the information I shared today useful, please give this video a thumbs up and subscribe to this channel for more finance related videos in the future. Alright, and that's a wrap. Have a great weekend and thank you so much for watching. Peace out.